Well, for our Ask the Expert slot this month, we have come out to see Nick Jones at his premises in Shrewsbury. Nick, good to see you, as ever.
Hi, Carl.
Before we get into talking about some financial bits and pieces this month, I notice you are brandishing your latest charity campaign. You've just a photo shoot been going on here, haven't you?
Yeah, photo shoot on the lawn. 4 of us are taking part in it's the longest day golf marathon challenge for Prostate Cancer UK. We're doing ours on the 4th of August, which isn't the longest day, so it means we've got more pressure. But we've got 18 holes of golf times 4, so
wow,
4 rounds,
okay.
72 holes. It is a golf marathon. You walk the equivalent of a marathon, and probably longer if you're not very good.
Well, I'd zigzag my way up. I'd walk 2 marathons,
Yeah,
I think.
military
so,
golf, left, right, left, right.
Yeah, so you're doing 2 courses twice.
2 courses twice, yeah, meal brace and condover.
And how's your golf at the moment? How's your form?
All right, but I think it's all going to go out the window, isn't it? Probably the first couple of rounds will be like normal golf, and then after that will be a war of attrition.
Endurance test, isn't it?
Endurance,
But then some of the endurance tests you've put yourself through this year, you must be in fighting shape.
No, I'm here now with 2 or 3 months ago, and I'm thinking I need to get fitter. and also my fellow teammates, Adam, Steve and Sean, are all feeling the same. We've got to get a bit fitter.
It sounds like great fun, though, and a great cause as well, of course, isn't it?
Yeah.
Talking about money matters, and in fact, raising funds for charity sort of leads into the bigger picture of this at the moment, isn't it? We're still hearing times are tight for people. Yeah. Even today, we heard that the cost of inflation for food is still 17+%, and it's hard for people. And I thought maybe this month it'd be quite nice to talk about how people prioritise what they still keep from a cover point of view, because there must be pressure on your household budget when you look at, we're struggling to make ends meet. Yeah. We've got cover for this, we've got cover for that. Are there things that people are turning their backs on that they shouldn't? What's it like out there at the moment? Yeah,
for people that are finding it difficult every month, it's really quite difficult to work out exactly what should be paid and what shouldn't be paid. You look at your direct debits, you look at your bank statement, and that's a good place to start, really, so you can actually see some people got lots of subscriptions going on, but they paid forever, and some things they never use anymore. Some people would rather die than lose their Netflix account. Other people are paying for Amazon Prime and never order anything. There were some statistics about that the other day, how many millions of people are just paying their subscription and don't actually go shopping online anymore. So there's lots of money that can be saved, but also when people have got protection policies already in place, what should they keep and what should they give up? But it's easy to keep paying £5 a month and then question it when you see it on a statement. But if you go to a local coffee shop, you're going to pay more than that for a cup, and that's just 1 cup of coffee, rather than covering yourself for £100,000 is the difference between your family being comfortable if something should happen to you and not.
Well, or like you say, a Netflix subscription or a Prime subscription, it's a few quid a month, which is just becomes part of the routine. But then we're also seeing quite a lot more, I think, in the media in recent months. This idea, of maybe a tragedy that families couldn't have seen possibly coming, it hits them. Yeah. They've not got cover, and then friends and relatives and just well-wishers are helping set up GoFundMe accounts to sort of get them through. Yeah. Is this because a lot of families have decided that the cover for things they hope they'll never need are the things that they're deciding not to carry on with then?
It could be. I've seen similar. So we've got lots of connections on social media, you've got friends on Facebook, and tragedy does strike, and there are people who've got young children who were taken unexpectedly, and probably they didn't have cover in the first place. So it's not that they decided to stop the premium, it's that they never really thought about it. But for somebody who might be 30 years old, for £5 a month, they can have £166,000 worth of cover. Pure life insurance, no critical illness or anything fancy, but purely to get some cover. So that would make a hell of a difference to the family, to the people that are left behind. And that's at 30-year-old. So 40-year-old, it's £5 a month for 100,000, and 50-year-old, it's something like £12 a month for 100,000. So again, not a massive amount every month, but really quite important. And then if you have a larger budget, then you can consider things like critical illness insurance, which is a lot more expensive because you've got a lot more chance of claiming, and the probability of claiming is what influences the premiums. So it's about 4 times as much to have life cover with critical illness combined, but very much worth it, because you may well suffer something nasty which doesn't kill you, takes you off the road for a while, and hopefully you recover and come back to work at some point. but you can have a lump sum that can pay out and ease a lot of the pressures, so then you can concentrate on getting better.
What's because there's critical illness cover and then there's income protection, isn't there? They're not the same, are they?
No. So critical illness cover tends to pay a lump sum on diagnosis of a specified illness, like a cancer or heart attack or something nasty. Whereas income protection is something that pays out a regular monthly amount generally until you're able to go back to work, and it might have a payment period of 2 years. Depends on the policy and the type of cover that you've actually opted for, and each element will have a different pricing bit to it. But speaking to somebody that is authorised and regulated, we all say this, don't we, every time, but can really make sure that your money can stretch further and can provide the accurate cover that covers your circumstances. Because not everybody needs the same level of cover, not everybody needs the same level of income protection. Some people have got great protection through work, other people are self-employed and have no protection because it's all on them.
Some people don't realise what protection they've actually got through various accounts or policies or things that they don't realise. Maybe their bank covers parts, you know, or sometimes you're covering the same thing 2 or 3 times, aren't you, somehow?
Absolutely, it's not unusual. Like pensions, really, people have moved from one employment to another. They've got all these policies in a desk or a folder, or they've got two ways of doing it. They've got a piling system, or they just throw everything when they receive it. So, but quite often we'll have a new client and we'll have a look at the envelope or the filing cabinet, and it will say, okay, this policy, that policy, that policy, and then when you actually build the picture of what they've got, they might not have a gap. They might be over-covered even. So then we might think about, well, which bits do you need and which bits don't you need? Or they might have a massive black hole in their protection that they could sleep better at night. And we were talking earlier about sometimes it just needs to be the breadwinner who's covered, and sometimes it's everybody in a family, so husbands and wives, whoever's looking after the children. Nowadays that's an expensive thing to cover. So if you're taken out of the picture and the family needs the children to be looked after and you're paying for that, that can be really expensive. So it's as important to cover the children's responsibilities as much as it is the breadwinner.
Things like, so let's look at things like life cover or critical illness or income protection. Can anybody get that? Do you have to go through like medical checks? Do you have to have doctor's examinations, or do you just apply and get accepted?
Yeah, it's a great question. It depends on the level of cover and your age, really. So if you're younger, generally there'll be less questions that are asked, and you'll get more cover for a lower premium. It's all about probability. If you've got some health conditions, then you might find it more difficult to get cover. But it's only extreme conditions that you're not coverable at all. Sometimes if you've had a previous critical illness and you're now looking for new cover, you might get a new policy that will provide cover for everything apart from what you've already had. And you know, that's where underwriting comes in. There's a process where you have a GP report that you sign to say, yes, please, the insurance company will write to your GP, ask for your notes, if you like. If you then are having higher levels of cover, then there might be a nurse visit that's required to come around and maybe take a blood sample, or maybe take a urine sample. But all of these things are part of the process, and don't let that put you off, is what I say. You know, preach really, and I would appeal, because the people with cover, when we have a death of a client, it's much better going around with a check than going around and just trying to unravel everything and trying to help the family cope afterwards.
Yeah, at a time when stress levels and emotions are running as
That's
high
not
as
air
possible.
ambulance, is it?
I don't know, is the drone up? No, it's not our drone, is it? SBLTV, I think we're all right.
No.
At a time like this, you know, as I say, when inflation is running high and people start to look at their household finances, does that tend to mean that actually, conversely, it does make people focus more on their finances and try to plan a bit further forward, to sort of look at the risk areas maybe in their portfolios then? Or?
It can do, yeah. We're spending a lot of time now with clients and refocusing on their objectives. So what are you aiming to do? If it's a pension plan, what age are you looking to start receiving benefits back out? And we don't talk about pensions now just about providing the income. It can be the legacy planning and the inheritance tax benefits now of retaining the money within a pension. It could be that it goes to your spouse. It could be that if the spouse doesn't spend it, then it goes to the children. It could be your children's children that end up spending some of your pension money. So it's really quite tax efficient and much more than just income for the future. And rarely now it's just your pension for your future. So we look at state pension, we look at income from savings portfolios, if people have got invested assets, if they've got property portfolios, and blending the right level of income, because you don't want to have more income than you need, because you pay more tax than you need to, and then you'll run out sooner. So it's that balance.
Because it always used to be, didn't it, as long as, you know, records go back, that the next generation always used to be in a more affluent, in a better financial situation than the previous one. That's not so much the case at the moment, is it?
That worked for the baby boomers, so people that could buy relatively inexpensive property and then just sit on it almost and not invest and even just hope it would go up in value. Pensions used to be sort of the final salary versions that were guaranteed, and you had a good payout and you had a guaranteed income for life. All of that kind of thing tend to be a done thing now. What we've found now is that clients who may be grandparents or parents of younger people coming through, they're trying to retain the cash they've got for as long as they need it themselves, but also help grandchildren get on the housing ladder. And they're doing that now rather than waiting until they've died and doing it through a will. They're actually saying, okay, how much can I afford to gift? There we go. What are the inheritance tax purposes? Well, it's a potentially exempt transfer. You've got to live 7 years, and all these facts and figures that we go into then. But actually, if the kids need it now, the grandkids need it now, then people are more willing to give it now. I think that's been a big shift over the last 10 years.
Yeah, because you're hearing a lot of people who are saying that they're doing that. It's not seen as a strange thing to do, is it now?
No, absolutely not. And you want to help the kids, but you don't want to spoil them. So you want them still to value money, but they need big deposits towards the mortgages because the house have got so expensive. So a lot more families are talking more openly now, which is fantastic because traditionally, I've been doing this a long time, it used to be families didn't talk about money. Right. And if you were asked about money, then you were nosy or you were in it for yourself. But now you're trying to help generations deal with inheritance tax at one end and getting on the housing ladder at the other, and then seeing how the family assets can help everybody along the way.
Interesting you say about how people, are more comfortable about talking about their finances now. Do you find that the tone and the type of conversations that you have now with people are very different to the way you had to approach these topics with clients when you first started?
So. Yeah, I think so. I think there's a lot more awareness now as well. People generally are a lot more aware of financial issues or financial opportunities or what a pension is. And sometimes we'll do workplace sessions and we'll go in and a lot of the team won't really understand what a pension is, what it's supposed to do. So we start right at the very start. Okay, this is a pot that you're putting money in tax efficiently. At the end, when you retire, it'll be there to give you some income back out. Oh, I get that. I just, people talk about pensions. I didn't know what it ever meant. And we have some very open conversation. But a lot of time now, the stuff that's available online, there's some really good information, there's some rubbish. That is always the way.
That's why they need people like you to pick through it, Nick, so that you can choose the bits they need to read.
Always, yes, yeah. I'm forever having conversations about, well, what's the next big thing? What should we invest in this? No one can tell you until afterwards what was the best thing to have done, but spreading around, diversifying, and having advice you can trust, that's the key.
Absolutely. Well, I better leave you to go and get on the driving range and the putting green, get some practice.
And in the gym, yeah.
The quicker you get round your 4 rounds of golf, the better you'll be feeling at the end of it, won't you?
Yeah, it's not till August, so we've got a little while, but I'm looking forward to it at the moment.
Good luck with it. I look forward to seeing you next month and update on how your training's going.
Brilliant. Thanks, Val.
Thanks a lot.
Cheers.